.404 Volume Profile Mastery. It is about the big picture now, and taking the big picture into account, you now got to know the models of the 4 trading variants you can implement in intraday trading or in day trading, but you can kind of apply the same logic to any time frame. We'll talk about this in the following. So in the big picture, you will have a volume profile of any viewed or analyzed time period. And there are going to be mountains and there are going to be valleys. The mountains and valleys give us information about the resistance and the support levels. And the bigger or the smaller the valley is, so the bigger the mountain or the smaller the valley, the stronger the information or the value of that one is. The resistance and support zones come from the bigger picture, and then they are transferred to smaller time frames. So when you analyze on a monthly, you can take the data and implement it into your weekly or daily chart, and then look for a setup on the smaller time frames, so you increase your risk to reward. The bigger the time frame, the bigger or the more value the information has. The bigger picture provides then or information about the big trend and the direction of the trading asset or trading instrument. So trading through the daily profile, it is the same like we just had. There are different phases. So if the market runs into a high volume area, it is like the value area of the previous day, but it can be any high volume area of a profile. It is likely to trade through it. So if it enters this high volume profile here, and it enters and it reaches the POC, it is likely to trade through that high volume profile to the next low volume node, so to the next valley. It will accept this mountain, cross this mountain, and go to the next valley. The market heads for the VPOC, in this case, then trades back to the lower area of the volume cluster, high volume cluster of the mountain, and then trade through it. Afterwards, there will be an acceleration and negotiation of the whole cluster. So it just passed the whole cluster, so we are in the next valley, and it can continue to accept the mountain or cross the mountain again and just continue with balance, but very often it steps to the next mountain, and then it either remains in this range, like I said, and continue there for a long time, or will continue, leave the cluster and search for the new cluster, or try to accept the new cluster, and is traded through that completely again. So of this cluster you have a volume POC here, and of this cluster you have a volume POC here. So you can have one profile, you have multiple POCs. Of course there is only one maximum point or one price level where the maximum volume is traded, so there's officially just one VPOC, but for explanation, we just now use that there are multiple high volume areas, multiple mountain tops, multiple VPOCs. There will be reactions, but when it enters another mountain, another high volume area, most likely it will trade through it again, the same logic we explained you now several times. So neutral zones usually have to be like resistances. So neutral zones are the zones in between the low volume areas, and there are no interest in leaving such a volume cluster if the level nevertheless is broken after a subsequent pullback. A strong acceleration is accepted if it accepts a new level. Sometimes it also happens that it fills up the low volume area, but the first plan and the first logic is always that we'll trade through the next mountain.